Welcome to this week's Money Metals podcast, helping gold and silver investors during these treacherous times. Now, here's this week's market wrap with commentary and analysis from the company voted 2015's Precious Metals Dealer of the Year in the U.S., Money Metals Exchange.
This is Mike Gleason with Money Metals Exchange, and it is my privilege now to be joined by Dr. Chris Martenson of peakprosperity.com and author of the fabulous work called The Crash Course. Chris is a commentator on a range of important topics such as worldwide economic and financial markets, governmental policy, precious metals, and the importance of preparedness, among other things, and we're very excited to get a chance to talk with him today. Chris, it's been quite a while, so welcome back, and thank you for joining us.
Hey, Mike. It's my pleasure to be back with y'all.
Well, to start off here, Chris, I want to get your take on where we are today. We've certainly got some crazy markets these days. The equities have reached extreme levels here, and one would think that we should be nearing a tipping point there, perhaps. Meanwhile, the out-of-control debt levels as a percentage of GDP keep climbing, and all the loose monetary policy and low interest rate environment from the Fed has really goosed the markets, but you have to wonder what will happen when the addict is finally cut off from its fix and starts to go through withdrawals. Talk about that, Chris. What do you make of the overall financial landscape right now?
Well, it is pretty much just a junkie market at this point. It's totally addicted to Fed money. The Fed knows that, and so does the European Central Bank and Bank of Japan. And they're all monkeying in markets. We know this, and they do it overtly, and I'm convinced covertly as well. And but at any rate, we've been through this 3 times now, Mike. We've seen what happens when the Fed throws easy money at things. They did it in 1994 in response to a small corporate bond market hiccup. They gave us the so-called roaring late 90s, and that burst, of course. That bubble blew up on them, and then they responded to that with 1% blowout interest rates, which gave us a housing bubble, among others, by the way. That was just the most obvious one to blow up. And then that popped, and of course that was a bigger bursting bubble. This one's for all the marbles. This is a global credit bubble that's been blowing since about mid-1970s, and no central banker wants to see this pop. They know perfectly well what happens. And so they've been inflating things with fingers crossed, hoping beyond hope that we get the growth we need to make all this pay off and work out. But anybody opening the paper today, as you and I are talking, the GDP for first quarter in U.S. came in at 0.2%. Europe's probably in recession, Japan doing nothing, China worse than advertised. So here's the summary. Lots and lots of money printing. They didn't get what they wanted, which was growth out of the deal. Now we have a dangerous, dangerous bubble, and not just stocks, but bonds. Both are going to burst at some point.
Expanding on that a little bit, since the '08 collapse, it seems that basically everything in the financial world, at least here in the States anyway, hinges on the Fed and what they're doing. And I would imagine that, like us, you're a bit annoyed at the tendency of the press to dissect every policy decision and every utterance. You know, will they raise rates? Will they not raise rates? Did they use the word patient? Did they remove the word patient? It's rather ridiculous, to say the least. But the Fed is still taken quite seriously. So at what point will the central bankers stop having so much influence?
Well, when this all comes crashing down, and I hope nobody ever listens to them again, and we honestly can end the Fed, not just the Fed itself, but this idea that you would entrust or empower 12 people to decide what the correct levels of unemployment are, what the correct levels of prices for equities are, what the correct rate for economic growth should be. These are all things that need to go through the market. We're going to relearn the most important lesson, which has been learned many times in history, which is that you have to let the natural business cycle work its magic. And sometimes that magic's on the upside, and then there's this creative destruction on the downside. This heavy influence of thinking that big government can solve all this stuff is the most broken idea ever. Listen, if GM had gone out of business, it would have been terrible for all the people who work there, but for every GM that goes out of business, you're probably going to have 20 brand new, fresh, dynamic companies come in and take its place, and that's how you move away from buggies into Model Ts and finally into Teslas. It's just part of the beast. So what's it going to take for the Fed to lose its credibility? It's just going to, listen, deflation's going to come roaring through, markets are going to get ripped apart again, and eventually we're going to have people realize that the Fed has way overstepped its boundaries and is actually, if you follow the sequence, took a little problem in '94, made it a big problem, took the consequences of that, turned that into an even huger problem, and took the consequences of that and have now turned it into something that I am concerned when it bursts. Literally nobody alive listening to this today will see the end of the effects of it.
In the crash course that you put together a number of years ago, you describe how our debt-based monetary system is inherently flawed because of its requirement for perpetual growth in the money supply. But as things progress, as we're talking here, and get more and more out of control, there are, of course, serious questions now about how much longer the fine people in charge will be able to keep the wheels on. So what is your best guess regarding what might replace this current system should it finally fail?
Well, we're going to have to move to, I think, not just one, but several different types of money systems. Each one enforces some behaviors, punishes others. The debt-based money system is really great at enforcing this idea of constant growth. When you're in debt, you do anything to get out of debt so you don't lose your house, your car, your fishing boat, what have you. So it's great at enforcing that, but we don't need perpetual growth on the planet anymore. We can't support it. We already look at issues around water, soil. Look what's happening with the collapse of the fisheries in the Pacific now. There's clear signs that say, hey, we're going to have to moderate things a bit, do things otherwise. And I think we're going to have to move to money systems that fundamentally cannot be under political control in terms of how much gets printed and at what rate and all that. I think money has to represent real value, and whether it's backed by energy in some way, or whether it's gold, or whether it's silver, or whether it's backed by, I don't even care, sheepskins. It doesn't matter. It has to be backed by something of tangible and intrinsic value, and I think we need several of them, several different types of money. So if the Federal Reserve decides it wants to print like crazy, I could wander over to Mike's gold-backed dollars and use those instead, and I would prefer your currency over theirs, and then theirs would lose value, and they would, through the art of competition, learn that they're going to have to manage their money system in a better, more useful way.
That's certainly something that the founders, had in mind when they set up this nation and drafted the Constitution, is that there wouldn't be central banks, for one, but the government would not be in control of the money supply. We inherently are going to get the types of issues that we're getting now.
Oh, absolutely. And it's even possible that the government could issue its own money directly. I mean, why would a nation borrow its own money? It's literally a concept. It's paper at best. And it's not something that we should be borrowing, and paying interest on from a group of people. So absolutely, I think that money is essential, and it's too essential to be left to politicians to monkey around with whenever they feel it's important to do so, which, by the way, is every time. So we're going to have to get back to basics on all this, and my concern, though, is that we're not going to until we're forced to, and my bigger concern is that this is going to be a heck of a crash when it finally comes.
One topic we've been covering on our site and in a lot of our commentaries recently is this war on cash that's been heating up. More and more financial institutions are starting to impose draconian measures to keep cash out of people's hands, criminalizing it in some cases. Obviously, they've been penalizing savers with low interest rates for a while now, but they seem to be taking it to a new level, and there's even been some grumblings by the central planners that maybe we should eliminate cash altogether. What do you make of all that, and what should people be thinking about as they're watching this situation unfold?
Well, what we should make of that was actually said directly by a Swiss bank when they prevented one of their key commercial clients from actually taking cash out, because the client was thinking, well, if I can either lose money with negative interest rates at the bank, or I can just keep cash in a vault and lose nothing, I'll do that. And the bank said, no, you can't do that, because that would interfere with Swiss National Bank policies. And so what they're effectively saying, when we have 0% interest rates, which are negative, which are punishing, punitive to savers, what's really happening is that is part of a program of financial repression. The central banks operate this, and it has a few key legs. One, negative interest rates. You have to lose money on it. Two, capital control, so that you can't escape the ravages of negative interest rates. Three, they're going to cap gold and silver or give you no other way out, and that really forms the primary part of this stool. So they've been putting us all through financial repression, and the purpose of it is to take a little bit of everybody's purchasing power and funnel that towards the government, and that's supposed to provide, it's like a silent tax. And they do this, this is probably the fourth program of financial repression run in the United States. This one's global. They're running it in other countries now too, but it really doesn't help if people can escape your ability as a central planner to punish their savings and to reduce their value over time and thereby take them. So that's what they're really saying. I'm worried about this war on cash. We've seen a frontal assault. They've been floating trial balloons, little PR things coming at it from multiple angles. So it's an idea. Obviously, anybody listening to this on your show is going to know that they're going to try and demonize cash. They're going to say terrorists use it or something illegal or something, and try and get to it that way. But really the primary thing is they want us all locked into a system that's going to effectively punish us all a little bit. And, the thing that gets, Mike, that really gets me about that is that even as they're running those programs, they are still at the same time printing money and handing it out in such a way that the 0.1%, the elites of the elites, make out like bandits. So what they're really saying is, you, the little people, can't have cash because we, the bigger fish who are running this thing, want to get even richer than we already are. It's really that immoral.
Your main message is that people ought to prepare themselves, and precious metals certainly plays into that in terms of financial preparedness. But from an investment standpoint, the PMs have had a rough go of it recently and have certainly fallen out of favor by the mainstream financial crowd given the weak price action over the last few years now. So what do you have to say to the gold and silver investor who may be a bit frustrated and left scratching his head based on what has transpired in the metals markets with this extended corrective and consolidation period?
Well, it extends beyond just gold and silver. I'd put almost all commodities into one basket. Where we look from 2011, this was the first QE program in the world where commodities actually did not go up by a lot, but actually went down from the initiation of QE3, $85 billion a month. Shocked me because we saw QE1, QE2, not so much during Operation Twist, but then with QE3, I was certain we were going to see commodities really lift off. But remember, the Federal Reserve had received a lot of angry calls from overseas, from various countries that said, hey, you gave us food riots, this is creating a lot of social unrest, cut it out. So to me, it's rather interesting that during the largest round of stimulative purchasing and money printing ever in Fed history that we saw all commodities wobble down. But here's the great thing about commodities. Supply and demand actually matter. When I look at this, if you'd said, Chris, 4 or 5 years ago, here's the deal. I'm going to show you a point in time where China is consuming 120% of all global mine output of gold. We're going to take another 700-800 tons per year going into India, another 600-700 tons going into the rest of Asia, and gold prices are going to actually just wobble down during that period. And I would have said, you're nuts, can't happen, but it is happening, and we're seeing massive flight of gold from the west to the east. I don't know how long the people in the west are going to put up with that, but it's at least 1,500 tons a year, maybe more, that has to be kicked out of our vaults to head elsewhere. I don't think that can go on forever. I think gold and silver are mispriced badly. Silver is below the all-in cost of production right now for primary silver mines. Oil's below the all-in cost of production. So we're going to see commodities eventually catch back up to at least their all-in cost of production, but I'm looking for gold to do a lot better going forward, primarily because I think there's a financial accident coming.
So expanding on that, what's it going to take to finally get them going again? You think just a collapse in the mainstream financial assets will get gold and silver going again? What do you think?
Yeah, we're right now, I would say probably 80-90% of the price action in gold and silver are explained simply by speculators. And you detect that because somebody asked me, Chris, gold went down or up $30, what happened? And I wander over and I look at the price of the yen cross compared to the dollar and the euro. And if the yen has gone up a lot, gold and silver will go up. If it goes down, they go down. So there's been this high correlation, which just means there are big players out there have access to a lot of liquidity, and they're playing games, which are long this, short that. They're going to short the yen, short gold, go long the Nikkei plus S&P. It's just a game. So we saw this in 2008 as well, right before the break, where speculators, again, there was money everywhere, and they were playing around with all kinds of things. They drive markets, but the instant they become concerned, they pull in their horns real quick, and institutions no longer trust each other. And it's when the institutions lose that faith in each other, that's when gold's going to do extremely well.
You, of course, talk a lot about preparedness and have lots of advice for folks. What do you have to say to people who are hearing this? Obviously, it's a little bit of a bleak picture that we're painting here with all of the headwinds going on in these markets. What should the average guy be doing right now if he's trying to protect himself and his family against what may be coming down the road?
Well, the most important thing is you have to know what's going on. So get the appropriate context. You're not getting that out of the newspapers. You're not getting that off of TV. Make sure you figure out what's going on. We have a product called the Crash Course, all free. It's an online video course, or it's a book, whatever you prefer. Just understand what's happening. And then, two, we highly recommend that people take some basic precautions, basic preparation steps. The first thing is don't have all your eggs in one basket. Don't have all your financial eggs in the market, in stocks and bonds. Even if you have, 4 in stocks and bonds, you are not diversified. We recommend people have cash, physical cash, or cash holdings too. We recommend people have gold and silver. Next, you want to invest in yourself. There are a lot of things you can do in your home, your homestead, to invest in ways that will take money out of your pocket today, but have you spending less in the future in ways that have double, triple-digit returns that guaranteed, as long as you are investing in the right systems in your home. So we're really inviting people to rethink what investing means. And we believe that there are a lot of great opportunities coming. But it's not going to be the old thing, Mike, of just send your money off to Wall Street, buy an ETF, buy an index fund, and it'll all go up. We think you have to be careful. You got to know where we are in the story. You got to pick your moments and your companies and the individuals even that you're going to invest in. If you want the future to look just like the past, we think it is a bleak story, but there's a lot of ways that we can improve our quality of life. And I'm here as somebody who, having digested this story, I am healthier than I was 10 years ago. I'm happier, I'm wealthier, and I feel very confident about the future. But I do worry about people who don't understand what the risks are and will enter this next period unprepared mentally, physically, financially.
Well, Chris, thanks very much for your time and your wonderful insights when it comes to some great resources where people can go to get themselves more prepared. Talk about your service there, the great content and commentary that you put out there at Peak Prosperity, and basically just tell people how they can find out what's going on there and what you've got at your website.
Well, 90% of the website is free. We have lots of content ranging from cutting-edge analysis. We have our video product offerings that people can understand what's going on in the world. We've got a great community. We have groups of people who have organized around either ideas or locations. We have groups in Santa Barbara, et cetera. For people who are interested in talking about where the world is going, our community is, if I had to use one word, they're curious. We're curious people. And so we're just trying to figure out how the world works. And we have a subscription newsletter service for people who like to go a little deeper, want a little more context, and they've got a nice group of people that write for us as well as myself. And it's just a really incredible community of people. If I could just say, we had a gathering, a weekend-long seminar just this past weekend, and it was phenomenal. Doctors, lawyers, engineers, people who own businesses, just people, very successful people, but who understand that the future could be very different from the past and are interested in understanding what they can do about it.
Well, Chris, thanks again for coming on. I really hope we can talk to you again in the future, and all the best to you.
Thank you so much. It's been a pleasure.
Well, that will do it for this week. Thanks again to Dr. Chris Martenson of peakprosperity.com. Be sure to check out the great stuff Chris and his team have for you there. It's first-rate resources for all things financial and preparedness, with some great practical action items that you and your family can take, as Chris mentioned, to make yourselves more self-reliant. And don't forget to check back with us here next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.